Welcome to Space Drift, subscribe the channel. Aluminium is everywhere, woven into the fabric of our daily lives. From the humble beverage can you crack open on a hot day, to the sleek electric vehicles gliding silently down city streets, to the soaring skyscrapers that define our skylines, and the airplanes that connect continents, aluminium is all around us. Its unique combination of lightweight, impressive strength, and remarkable recyclability makes it absolutely essential to modern life. Aluminium is not just a material, it's a solution to many of today's engineering and environmental challenges. In construction, it shapes skylines, allowing architects to dream bigger and build higher, while keeping structures strong yet lightweight. In aerospace, aluminium's strength-to-weight ratio enables efficient flight, making air travel safer, faster, and more sustainable. The automotive industry relies on aluminium to meet strict emission standards, reduce vehicle weight, and boost the range of electric vehicles, helping drive the transition to cleaner transportation. Its versatility is unmatched, preserving food freshness, conducting electricity in our homes, and cooling the electronics that power our digital world. The global aluminium trade is a multi-billion-dollar engine, powering industries and economies on every continent. It connects economies and industries worldwide, creating a vast network of supply and demand. But aluminium production is energy-intensive, often concentrated in countries with access to cheap, abundant power, especially hydroelectricity, shaping the global map of production. This creates complex supply chains that are highly sensitive to global events. Any disruption, whether from natural disasters, political instability, or trade disputes, can send shockwaves through the market, causing prices to spike and supplies to dwindle. Manufacturers depend on a steady, reliable supply of aluminium to keep their operations running smoothly. Shortages mean higher costs, production delays, and uncertainty for businesses and consumers alike. Aluminium's story is one of global interdependence, where nations, industries, and people are all connected by this remarkable metal. Its stability is crucial for industry and consumers alike, touching nearly every aspect of our modern existence. Aluminium is not just a material, it's the backbone of our interconnected world, supporting progress, innovation, and sustainability for generations to come. For decades, Canada and the United States have shared a seamless aluminium trade, powered by Canada's hydroelectric smelters and America's manufacturing might. Trade agreements like NAFTA and USMCA created a frictionless market, making Canada the top foreign supplier of aluminium to the U.S. supply chain span the border, with raw ingots from Quebec feeding factories in Ohio and Michigan. This integration fostered stability, efficiency, and mutual economic benefit. Companies invested and planned for the long term, confident in this cross-border partnership. But recent events have shaken this foundation, threatening a relationship built over generations. In early 2025, the U.S. government made a stunning announcement. A 25% tariff would be imposed on all Canadian aluminium entering the country. This move sent shockwaves through the industry, as Canada had long been America's primary supplier of this crucial metal. Just months later, the situation escalated even further. The tariff was doubled to a staggering 50%. The rapid increase left businesses on both sides of the border scrambling to adapt, with many left in disbelief at the speed and scale of the changes. This seismic policy shift shattered decades of free trade agreements and cooperation, making it nearly impossible for Canadian aluminium producers to access their largest and most important market. The border, once a symbol of economic partnership, now became a barrier. Canadian producers, suddenly cut off from their main customer, faced a commercial crisis overnight. Plants that had operated around the clock were forced to slow production, and workers worried about their jobs and the future of their communities. The once integrated North American supply chain was abruptly severed, with ripple effects spreading far beyond the aluminum industry. Railways, ports, and trucking companies all felt the impact as trade routes were disrupted. U.S. imports of Canadian aluminium plummeted to record lows, creating a supply vacuum in American factories and a glut of unsold metal piling up in Canadian warehouses. The imbalance threatened jobs and production on both sides of the border. The tariff didn't just disrupt trade, it forced a painful realignment of the entire industry. Companies were forced to rethink their supply chains, renegotiate contracts, and make difficult decisions about layoffs and investments. Canadian smelters scrambled to find new buyers overseas, seeking markets in Europe and Asia, while U.S. manufacturers struggled with shortages, production delays, and soaring costs for the aluminum they desperately needed. The era of predictable cross-border aluminum flow was over. What had once been a seamless exchange was now marked by uncertainty, delays, and frustration. A new, uncertain chapter had begun for North American trade, one defined by unpredictability, adaptation, and the search for new opportunities in a changed landscape. With the U.S. market closed, Canadian aluminum producers executed a rapid pivot, rerouting over 100,000 tons of metal to Europe. Major companies like Alcoa shifted up to 30% of their output to new buyers across the Atlantic. European ports, especially Rotterdam and Trieste, saw a surge in Canadian shipments. The Netherlands and Italy quickly became key destinations, filling local shortages and welcoming the influx. This great diversion was a swift, market-driven response to U.S. protectionism. For Canadian producers, it was survival. For Europe, an unexpected windfall. The global aluminium map was redrawn almost overnight. Europe's appeal lay in CETA, the Canada-EU trade agreement eliminating tariffs on aluminium. While the U.S. raised barriers, CETA opened a duty-free gateway, turning crisis into opportunity for Canadian producers. European importers benefited from high-quality, low-carbon Canadian metal at lower costs. The influx drove down European aluminium premiums, making goods cheaper and more competitive. The contrast was stark. U.S. protectionism led to higher prices, while Canada-EU free trade delivered savings and supply security. For Canada, CETA became a lifeline, proving the value of diversified trade relationships. In a volatile world, open markets offered resilience and reward. The U.S. tariffs triggered a self-inflicted supply crunch, cutting off its largest aluminium source. American manufacturers scrambled for alternatives, but replacing Canadian supply proved nearly impossible. Prices soared. The Midwest premium jumped from 24 to 68 cents per pound, squeezing profit margins across industries. Companies delayed purchases and drew down inventories, but these were only stopgaps. Imports of aluminium scrap surged 40% as buyers sought cheaper, tariff-free options. Yet scrap can't fully replace primary aluminium, especially for high-spec applications. Even with sky-high prices, importing Canadian metal with a 50% tariff remained unprofitable. The U.S. market was trapped, high prices, persistent shortages, and no easy fix. The tariffs backfired, hurting American industry more than helping it. The supply conundrum deepened, with no relief in sight. Why not just make more aluminium in the U.S.? The answer: it's not that simple. Restarting idle smelters is slow, costly, and risky, requiring huge investments and years to complete. Most U.S. smelters are outdated and need cheap, long-term electricity to compete, something Canada and others already have. Companies hesitate to invest without policy certainty. Tariffs could vanish with a change in administration. New smelters are planned, but they're years away and face major hurdles. The U.S. remains dependent on imports, unable to fill the supply gap quickly. Tariffs raised prices but failed to revive domestic production at scale. The supply gap persists, with no easy domestic solution. The rerouting of Canadian aluminium to Europe is no longer just a temporary adjustment. It's becoming a permanent and defining feature of global trade. What began as a response to tariffs and shifting policies has evolved into a new normal, with Canadian producers and European buyers forging deeper, more resilient connections across the Atlantic. New relationships, logistics networks, and commercial norms are taking root, fundamentally changing the way business is done. Canada's reliance on the U.S. market is shrinking as it builds trust and infrastructure with European partners, opening doors to fresh opportunities and reducing vulnerability to future policy shocks. Even if tariffs are eventually lifted, the trust that once defined the U.S.-Canada aluminum trade has been eroded. Canadian producers, having invested in new supply chains and relationships, may now prefer to keep their European ties strong as a hedge against future uncertainty, ensuring they're never caught off guard again. U.S. policy decisions now shape the future of this industry. While lower tariffs could bring some Canadian metal back to American shores, the old status quo is gone. The landscape has shifted, and the U.S. must now compete for Canadian exports in a more complex, globalized market. European authorities, meanwhile, are closely monitoring the influx of Canadian aluminum. They remain vigilant about potential supply imbalances and the risk of export restrictions, knowing that a sudden surge could disrupt their own markets and industries. For the U.S., reversing this shift won't be easy. Without a major policy overhaul and renewed trust, American buyers may find themselves sidelined as Canadian producers look elsewhere for stability and growth. Ultimately, economics dictate that goods flow where they're most valued and least penalized. Canadian aluminum now finds a welcoming market in Europe where demand is high and barriers are lower. By imposing tariffs, the US inadvertently redirected billions in trade to its competitors, strengthening Europe's position in the global aluminum market and encouraging Canadian producers to diversify. For now, these new transatlantic routes are thriving, reshaping the global aluminium landscape and creating a web of connections that may endure for generations. The North American artery has been severed. A new Atlantic lifeline now pulses with opportunity, innovation, and the promise of a more interconnected world.